a smaller group today, but the group today, you guys are really more focused on the real estate investment side, not really focused on business funding. And here's a reason why you don't want to just get stuck in one sector. You may deal with a real estate investor that also has a construction company. And so he's not just flipping the properties, he's actually doing the construction. He needs money, he needs equipment financing, he needs money for materials. He's got to hire new guys in the job, whatever it is. So the needs of this client particularly are not just the purchase and the rehab, but equipment financing as well. But a cash advance to keep cash flow going, right? I'm sorry, go ahead. Go ahead.
I'm sorry, Ryan. Actually, I'm working with a business client at the moment who's looking for a credit line. Reached out to her for her real estate needs, but she responded back with a business loan need. So I'm working on that at the moment. So yes, you are absolutely correct.
That's great. That's great. And so it's important to be armed in this way because you limit your ability to fund deals, right? Or you may have an investor and you think, oh, this is going to be a great client. They're going to need all kinds of loans. But if you only know one half of it, you're never going to get that client because the person, the broker who has the whole of it figured out is going to win over the deal. And they're going to stack products. They're going to give them a bunch of loans and make a ton of money. And so don't you want to be that person? You've got to dig into these things. So on Nizal, I'll warn you against lines of credit for business funding. They don't pay well. They sit idle. When it comes to business funding, avoid lines of credit. Go for the cash advance. Go for the term loan. If they have shot credit or they're a default merchant, utilize real estate as collateral. There's a COVID-19 relief program. You can go in any of these directions. Avoid the line of credit. Okay?
Sounds good. We'll do.
And a good way to turn that around is to say, listen, what you're looking for is a batch of loans, right? Mr. or Mrs. Client, right? You want that line of credit. What you're saying is you want money on demand, right? I can absolutely do that for you. If you want to know what you think if you want to tell me what you think your borrowing habits throughout the year will be, I can help you with that, right? So for instance, if you think in the year it's going to be $100,000, but you don't need $100,000 in one shot, well, I can give you 4 short-term loans of $20,000 to pop throughout the year. So that way you're getting money on demand as you need it, right? We don't have to do the lump sum. We can absolutely do the lump sum for you. But there's plenty of businesses out there that borrow like that so they don't put too much pressure on cash flow. We can get that done for you. If you want that extended term loan, we can look into that for you. I'm going to need some docs, but we can look into that for you, right? But try and start talking about other programs. Don't just get stuck on that terminology of credit line of credit.
Got it. Makes sense.
You got it. Absolutely. Anybody else? Any questions? Any business funding clients you're dealing with? Any objections you have a hard time overcoming?
Yeah, Ryan. Yes, James here.
Hey, James.
Yeah, I've had at least 2 or 3 people reach out to me about business loans, but they're like pretty much brand new businesses.
Yeah.
Startups. So I guess we don't really have any programs for that.
Yeah.
Currently, is that right?
Yep. Avoid them at all costs.
Okay. Sounds good.
You got it.
Thanks.
No worries. That will happen. That's really no different than talking to wholesalers where they ask you a million questions. They're really just trying to get an education from you, but at the end of the day, they're not going to be borrowing any money. And so you kind of want to get out of those conversations as quickly as you can. And that's why in a little bit we're going to be talking about wholesaling because we can monetize those conversations for you guys to where you can be earning money. So that's good. 100%. And so maybe even there's an angle there for startup businesses who are looking for some capital as well. But in any event, I do urge all of you to jump into the business funding sector. You've got to familiarize yourself with it. Just to compare commissions, I mean, you can earn a lot more money in business funding with smaller loan amounts than you can with real estate. For instance, you close a $500,000 loan in real estate, and you get, say, 2 points on it. That's a $10,000 commission, right? Excuse me, 500,000. You can only get, there we go, right? A 10,000 after split, whatever it is, versus a 5,000 if it was 1 point, right? But let's say you closed a $500,000 loan in business funding and you collected, I don't know, 7 points. It's a $35,000 commission, right? So you see where I'm going with this. If you go to the lower dollar amounts, If you close $100,000 loan in real estate, right, and you multiply that, let's give it 2 points times, you get $2,000 commission, right? You close a $100,000 loan in business funding, you get 8 points. That's an $8,000 commission. See where I'm going with this? So you don't overlook it. And if you think you've done it in the past and you got it worked out, it's as easy as, oh, you want money? Great. Send over your bank statements and fill out my application, forward it to the lender. You're dead wrong. That's not how business funding works. You will never make money. That's not at all how it works. You've got to work your survey. You've got to ask the right questions. You have to analyze bank statements, put together a worksheet of averages of numbers for deposits. Make sure you're qualifying those deposits, taking a look at negative days, paying attention to incoming wires, daily payments, weekly payments, monthly payments, weighing debt versus income, seeing what their actual room for affordability is, in order to see whether or not there's even a deal on the table to begin with. Being able to spot fraud, stop payments, things like that. That's what it takes before you even submit to the lender. And then when you submit to the lender, if you submit good data, the lender respects you. You'll make money. If you submit bad data, the lender will terminate the agreement with you and no longer accept submissions for you. Some lenders will even just flat out steal the deal from you. Right now, luckily that won't happen with us because we have large volume of submissions. But if you're an independent broker, that absolutely happens. I had a lender once steal a $150,000 deal from me on Christmas Eve. I didn't get paid a dime. So it can happen. So you've got to have good qualification skills.